Welcome back, everyone, to NYU Grad's Daily Podcast. I'm going to attempt to do this in under 15 minutes. This is Thursday, December 14th, after market hours. Hope you're having a great day. Today's session was all over the map. Let's go through the top and in order of how I usually do this. Looking at breadth, we had 1,920 new highs. So slow clap. Expansion on yesterday. New lows only 119. So very bullish on the breadth side, but the complexion was a little bit different. We had 74% of shares advancing versus 22% declining. 20% of shares under the 50-day, which basically means 80% are above the 50-day. And we had 33% below the 200-day moving average. So all in all, headline, great news. Couple warts today. We opened up hot, right? It was continuation from yesterday's FOMC bullish mania. We started to peak out or putter out after lunch. Now, I've been always mentioning at 12 o'clock, there's usually some buy algorithms that magically appear. I guess that's all AI and CTA, computer generated algos. But we actually went red. The NASDAQ went red first, around 1 o'clock, meaning below yesterday's close. Then the S&P, then the Dow. But then right around 2 o'clock, Santa Claus, Ryan Reynolds, pressed the buy button again, and we closed green. So the Dow closed up 158, up 0.43%. The NASDAQ up 27 points, up 0.19%, and the S&P up 12, which is 0.26%. Now, that doesn't tell the whole story. The Magnificent Seven were not doing so hot today. So looking at the forest and not the trees, this tells me, looking at what was strong and what was weak, it was rotation. Big banks were selling off Microsoft, Google, Amazon, and the like, as well as shares like Meta, Walmart, Costco, Procter & Gamble, Coca-Cola, Pepsi, and they were moving that safety money and probably sprinkling it with high risk or banking or real estate. That's what was really up today. Real estate had a gangbuster day yesterday as well as today. The implication here is if there are 3 rate cuts in 2024, the builders are going to be able to sell more of their inventory, and they were up very large today. They're anywhere from 2 to 7% on the day. I will post a screenshot of just a few of them. Curiously, as I mentioned, Magnificent Seven all were kind of weak. Nvidia was up 0.55%. Tesla was the strongest, up 4.9%. And then you had home improvement like Home Depot up 2.4%. And you had banks up like JP Morgan up 1.8, Bank of America up 5.9, Wells Fargo up 5.7. Energy bounced. I mentioned with all of the FOMC news that what we all should be watching for, in addition to yields, is just inflation in general. Because if they are going to cut and Wall Street anticipates those cuts and asset prices rise, home prices rise, then everything else is going to go up. Prices of things at the grocery store, at Amazon, that is inflationary by nature. And if yields go down, yields are correlated with the dollar. So if you have a strong dollar, you have strong yields, vice versa. So if yields go down, dollar goes down, and dollar going down is the definition of inflation. You can buy less with your dollars. So by the time the Fed is potentially going to cut in 2024, the dollar, if it keeps sinking, let's say the dollar goes from here, DXY goes from 100 to 80, can they cut? Because the dollar will be very weak at that point. Hypothetically, this is a thesis, right? Like, you have to use your analytical skills here a little bit. So if Wall Street and stocks are going to front run and try to guess the Fed, and all risk asset prices rise and inflation rises, the dollar tanks, oil goes up, gold goes up, how is the Fed going to cut? So this is what we have to watch out for right now in the marketplace. Let's see, what else can I get into today? It's only 10 trading days left, so it's going to be, unless there's a catalyst, we're just gonna slowly drift higher here. So with those 10 days, you want to watch basically the VIX, because I really don't think the VIX can go much lower. I'm still waiting, praying that VIX goes into single digits. I have my buy orders for option-related positions, and the trigger will be if the VIX goes into single digits. The 10-year yield was down again today, but it closed off its lows, and it's trying to fight back. Oil was the opposite. Oil finished up, but off its highs. However, my thesis is inflation is not dead, and we are going to see prices of all of the things that we need to buy for daily life is going to go up. So that's another thing to watch out for, just inflationary pressures. Real estate, as I mentioned, was up big. Energy, basic materials was up today as well. Adobe down again, 6.35%. This is after their light guidance. Adobe has been a great secondary bucket in the secondary bucket after the Magnificent Seven as a bullish participant. But yeah, that's really about all I have to cover today. It'll be a short one. Hope you are doing well. Hope you're finished with your holiday shopping and you're able to take some time off. This time of year, I know a lot of companies, like Adobe, when I was at Adobe, they would give the last week of December off, and that would trigger a lot of their employees to take the week before the last week of December off. So you literally have 2 full weeks of vacation. I know a lot of people are already checked out. So if you are already off for the holiday, thank you for spending your time with the podcast. I really appreciate all the new subscribers. Welcome. And I will see you guys after the Friday session. Have a great evening. All right. Bye.